Hey there, everybody in the futures room. I think I got sight and sound okay. Hope you guys are doing well. For those of you who may not know, my name is Allison. I did a free webinar earlier this week going over the profit recycling class. Thanks, Darrell. And I thought I would take this time to help answer any of the questions that you or those in the options room might have for me. I know that I got a whole bunch of questions from email coming in, and I've been working most of the day to answer those for y'all. So hopefully you guys got a reply email back if you've emailed me. If not, I'm still working through them, but I thought this would be a great time to be able to talk with y'all and answer some of the questions here in person before the class this Saturday comes through. Bill, so first question starting off, Bill's asking, will we need the awesome oscillator to implement your method? No, you don't technically need the awesome oscillator. It is a free study, however. So if you want to add it to your charts, you're more than welcome to. It's one that helps track momentum. So let me go ahead and widen this chart to a 1-year daily chart real quick. Get a better view of everything. But the awesome oscillator helps track momentum. So it doesn't always match up with the squeeze, which is why I still use both of them. But if you like, you're more than welcome just to kind of get that info from the squeeze and not necessarily have the awesome oscillator out there to be able to use it in trade. Yeah, Rise, I can go over the compound breakout tool here. I'll definitely go over it in more detail in the class. But here are some ways that you can identify the signal. So an excellent signal on the tool is usually when all three signals print at the same time. The three studies that are used within the compound breakout tool are several simple moving averages, the stochastic, and the MACD histogram. And I look at several different things on each of those studies individually. And before I came to simpler trading, my charts looked even messier than they did now, if you can imagine that. And when I came here, I was told that Eric was a god at creating indicators and tools. And so I brought to him my list of tools that I had, and I asked if, this would be a viable idea, if he could maybe put those together and create something around that would make my charts look a little bit more simple, a little bit more neat. And he came back to me with the compound breakout tool, and it has worked excellently. And it is much cleaner than having all three of those studies on at the same time to watch everything. So just very simply, like I said, I'll go into this more detail on the day of the class. But whenever you see a triangle print up here or down here, that indicates that all three signals are firing at the same time in the same direction, and usually constitutes a valid signal. Back here, we can see we had a bearish signal form whenever we were trading up here. That would have given you an early indication to maybe go bearish. Had you waited for a bit more confirmation, you might have waited for the break in this red ATR trailing stop. And then once you got that, you could have played this nicely to the downside. You might have taken profits here once this signal canceled out itself. Or you could have looked to base it off your price bars itself. But here, this next signal, whenever you get to that print, you'll see a dot either down here or up here that starts to print. And 2 is usually either an early entry signal, if you want to jump in and be a little bit more riskier, or it just gives you a clue and a heads up that, hey, 2 of these signals are starting to print. You might want to keep your eye out for a third signal to come. So here we can see if you had jumped in on the 2 signals to the upside when they printed, which was this day here, you might have jumped in early to a rising bias trade, and you would have caught a few extra days of momentum before this third signal print. Had you waited on this third signal, though, you still had a nice room to the upside to go. Whenever you get, let me pull up a chart that shows this a little bit better. Lulu, for example. So whenever you see a change in those indicators, whether it's choppy like this and you're getting 2 signals that print back and forth, sometimes it will even be 3 signals that print back to back, bearish, bullish, bearish. Other times it will just be 1 box that prints back to back like this. But when you see this constant flip back and forth where it almost looks like Christmas lights out on your roof, this signals consolidation. And as you can see here, Lulu was trading in a nice sideways range, We were getting that choppiness and breakout signals. Typically, whenever you see that occur, it will, not always, but sometimes be coupled with a squeeze pattern forming down here. And that lets you know. And then once you get a bit more validation on those signals, so for example, here we had 2 that printed to the upside. We started to see this squeeze fire higher. That would have given you a sign to maybe go long. And certainly had you played through that symbol, that was a nice move to the upside when you got those top hats starting to print, maybe telling you to take off your profits. So that, in short, is the compound breakout tool. So I know a few more questions came in. Let me try and scroll through. Rico chat, yeah. So there is a way of technically getting around the day trading rule, but it's not by actually closing and opening the trade the same day. So as I mentioned, I'll go into much more depth about this in the class. But basically, it's the idea of legging into trades. But as you're doing it, you're legging into those spreads for an overall positive net credit. And that's how you're able to take advantage of those intraday moves without necessarily opening and closing the same strike within the same day. So you're never actually triggering the day trading rule because you're never opening and closing within the same day. But by legging into these spreads, the way I do on my charts, and the way I do it through the option chain allows me to lock in those guaranteed profits, or worst case scenario, reduce my risk from the initial strike I jumped into. And that's how I'm able to avoid those day trading rules and help build up the small accounts while still taking advantage of the intraday movement, especially in this volatile market like it is here. The oscillator, Tim, if you're referring to the awesome oscillator, which is down here, that's not a proprietary tool. That's free on many charting platforms. I've used several charting platforms over my trading journey, and the awesome oscillator is one that I actually was one of the first indicators I've ever started to use while I traded. This was one of the main ones I used, which is why I still use it today. But it is a free study out there. And in the class, what I will do for those of you who want your charts to look like mine is I already have a shared link saved out there that includes the compound breakout tool as well as all the free studies I use. And a lot of them are free. Some of them aren't, like the multi-squeeze, the multi-EMA crossover, the top hat, for example. Those are proprietary still. You don't necessarily need them in order to take these trades. I find them personally helpful. But I will share all the free studies I use along with the compound breakout tool in a shared link. So for those of you who have Thinkorswim, it will be an easy plugin. Otherwise, in the class itself, I'll go through all the indicators I use, and then you can look yourself to add all those free ones onto your charts if you have to do it manually. Yeah, and yes, Helen, I will definitely share my workspace so that it's easy for you guys to add it onto yourself. Like I said, it won't unfortunately include these. So if you have these and you want them to be added, you'll need to input those yourself. But it will include all the free studies and the compound breakout tool available with the class. And then thank you, Marlon. He posted that link in the options room. I'll post it over here in the futures room as well. But for those of you maybe interested in what my chart setup looks like, on my traders page, there's a video that goes through all of the studies that I like to use and how you can add them to your Thinkorswim chart, as well as the internal settings that are there. So for example, the ATR trailing stop is slightly modified so that they're dots and the colors are blue and red. So I go through all that with y'all. Deb and Z. I personally don't trade futures. She's asking, has anyone used the compound tool for trading futures? I don't personally trade them, but you can use the tool. So as you can see here, whenever we pull up the ES chart, which are the S&P futures, you can see that it still populates out quite nicely. So let's look most recently at what's happened. Here, you had a full set of breakout signals to the upside. And you saw a nice move up to that resistance level. And probably when you stalled out there, you might have wanted to take your profits off the table. Next, we got 1 and then 2 breakout signals to the downside. This would have been your early entry. And you could have taken that down to this point. Here, you got all 3 signals to print. So you might have missed out on a tiny bit of profit there, but you would have continued down to the lower Bollinger Band. and maybe had stayed in that once you saw us leveling out, you might have taken your profits there. Or if you waited until the signal, you would have taken it back here on this day whenever this one printed, canceling out the bearish signal here. So you can most certainly use this on the ES. And if you're able to trade futures and able to day trade getting in and out of the trades, you can still use the entries and exits that we talk about in the class and just apply it to your future trades. But instead of looking to leg into the trade as you would on the options, you would just look to close out whenever you're looking for that leg in part. So you can still look at it for intraday plays and taking profits. And certainly this tool is still viable to use on the ES and on the futures. And Jay, yeah, it absolutely works for shorter time frames. So Jay was asking if the compound breakout tool could work for the smaller time frames, and it absolutely does. So here, for example, are my main SPX charts that I use for my intraday charts. And you'll notice when I pull them up, mind you, I don't use them on this level. I always zoom in a lot. But when you pull them up, you can see here that the compound breakout tool shows on all these time frames. Now, of course, much like any indicator on a smaller time frame, you might get a few more choppier signals. But that's why I look at all these different time frames so that when they're a bit more in line with each other, that's when I take my entry. So, for example, we saw a nice bearish trend overall on the 5 and 10-minute charts. So whenever I start to see those bearish signals pop up, that might have given me the entry to go in. And then certainly on the hourly chart, we can see here we had a full set to the downside and saw some nice follow through. It did get canceled out here, but had you stay in once this level broke, you certainly could have continued to trade along with that to the downside. So it's able to be used both on intraday and long-term swing charts. And then, of course, if you are a longer time frame trader, like a weekly, you can also use it here on the weekly charts. It's a great indicator on the weekly, to be quite frank. I'll oftentimes see that it's in line with nice overall trends. So right now, because the market's been choppy with this pullback, you can see here the indicator is also printing a bit more in line with consolidation. We had this one that stopped printing and then all of a sudden started printing again. We had this one that switched from bearish to bullish, and now it's stopped printing because this one has started up again. So because of that, we're seeing that choppiness. We're seeing that in line with the market consolidation here. And I will say, if we do start to break a little bit further below this 100 and trade below that, then I would not be surprised to see a few more bearish signals pop up here to confirm trading that to the downside. So let me switch back over here. Maven, so I kind of went over that a little bit, but the way I do it is because I never actually open and close a strike within the same day. If I do, then I am day trading, and that will count as a tick against my rule. But if it's the same day expiration, like on SPX, for example, I'll let that trade go into close and settle out. So wherever settlement happens to be, that's how my trade ends up doing. But the way I avoid day trading while still trying to lock in that guaranteed profit is by legging into the spreads throughout the day. So I'll watch those intraday charts like I mentioned. I'll watch the option chain. And that's how I'm able to leg in and guarantee those profits for the day without technically day trading itself in the account. And that's how I'm able to avoid that rule. RS is asking, can I explain the entry and exits with the ATR trailing stop? Yeah, so SPX will be a great use of that. The ATR trailing stop are these dots here, the blue and red dots. The way I like to use the ATR trailing stop, which is a free indicator on most charting platforms. So once again, feel free to add it on there if you want it. But the way I use it is for overall support and resistance levels, as well as a potential trend change. So here, for example, we saw a switch from blue to red on the weekly chart. We saw a confirmation of a move lower, had a little bit of a pullback. We're not able to hold that level, broke back down again, and then pulled back up here to test the red ATR trailing stop as resistance. Once we saw that switch from red to blue, this is starting to indicate that it's turning more into a bullish trend. And like I mentioned on a weekly chart, these signals usually stand out a little bit more strongly, because you're not getting as much of that choppiness as you would on the intraday charts and as recently as sometimes the daily chart. But we saw this flip from red to blue, so that would have given you a signal to maybe start to look bullish. You also had positive momentum building here, another bullish sign. You had 2 breakout signals starting to print. So once again, a little bit early of an entry, but still a viable entry if you wanted to jump in. That would have led you higher here. You had a bit of a pullback. You could have held through this price-wise depending on your expiration, or you might have taken profits once you started to see this consolidation in this signal print here. If you waited through the choppiness in this pullback, you see that we tested support of the blue ATR trailing stop. That ended up holding. That bounced the next day whenever the price broke above. Let me zoom in here a little bit. But whenever the price here broke above the moving averages and closed above them, that in turn turned those levels into support. That same day, we had 2 breakout signals to the upside. We started to see a weekly squeeze print. So you could have jumped in early there. Otherwise, you might have waited for this 3rd signal here to jump in if you were looking at a trade off of that blue ATR trailing stop as support. From there, you saw the squeeze fire higher, and we certainly continued in a nice trend for several weeks up to this level where you might have looked to take profits once this compound breakout tool signaled, printed a bearish signal that cancels out this prior one. It means that we're either going a bit more into consolidation or maybe a bit of a pullback to support. We technically pulled back to support and then continued higher. And you can see the ATR trailing stop continued to print support all throughout this time. And it wasn't until we broke here in December going into the start of this year that we started to see a bit more consolidation and choppiness within that trend. So we see the consolidation show itself down here. We see the pullback to support levels of the moving averages. And then we went back up, tried to test that level again, broke a little bit above it, but we're not able to hold it, and then have since continued in that consolidating range into today. David, yes, in the PowerPoint that will be a part of the class webinar, I go through each of the studies that I use and how I use them. And I will, of course, go over how they work in line with one another whenever I'm looking to take longer term swing trades using the profit recycling strategy, or when I'm looking at these intraday trades, which is a bit more my style overall, just because I like that quick movement in and out of the day trading. So let me keep going. Cloud, great question. Cloud's asking, once a signal quits printing on one of the lines, does that last signal of that line still apply? So let me see if I understand what you're saying here. You're asking if it stops printing, kind of like what it did here, does this signal still apply? And the answer is no, not until you either see a dot reappear or you see a cancellation of that signal. Once you get another box that prints, it cancels out whatever signal was prior to that. So that's kind of how you know when there might be a trend change, either into consolidation or the opposite way, or might give you an early heads up, hey, you might want to look at taking your profits off the table if you haven't done so already. So I hope that answered it. If it didn't, please let me know and I'll try and re-see what you were saying and answer it properly. Yeah, Chris, I'm probably going to butcher this, so I apologize, but Chris Amir is asking, can you show an example where the signal did not work and how you filtered it out? Yeah, I do have several examples within the class where I'll show where a signal might not have worked out, but ended up still working out in the end overall. For example, I believe this will be sent out in an email today, but the other day actually, let me go back to my intraday charts and I can pull this up for you guys live because I have the data right here. But yesterday, actually, I took an intraday signal. And for those of y'all who were trading yesterday, you knew it was a bit more of a choppier market day overall. Let me see if I can't find the time that this trade was taken here real quick. I was in a few yesterday, so let me pull this up. Okay, so yesterday, around 2:10, so going into the close of market, this is Friday, so I need to zoom in on Thursday. So going into the close of market here, we are starting to get some choppy signals. Let me pull this up on the other time frame so you get a better idea of what I was looking at. So yesterday you can see the overall day started to turn a bit bullish, but was still kind of choppy, and it wasn't a very strong trading range, especially compared to what we've seen prior. Because of that, the volatility started to drop off a little bit, which means the theta decay was starting to hurt some of those intraday style trades. And so I had jumped in on a declining bias signal around 2 o'clock to look for a bearish trade. And as you can see here, that's not what ended up happening. We actually broke back above these support levels, resistance levels, turning them to support. We were really consolidating in this range. And I was looking at a start for a potential breakdown here. It was before this signal printed, so it wasn't a viable signal here. Whenever I take a look here, doesn't look like we quite had it here, but we had squeezes happening. We had the strength going down there. We had a full set of breakout signals on the hourly chart, which is why I liked it. So I knew the intraday was acting a bit more choppy. I still had this bearish signal here. It looked like we might have been starting to break back below and turn back into a bearish trend had we broken the 10 here. So I jumped in a little bit early to try and see if I could catch that movement. And unfortunately, I saw that this was starting to turn. And so I quickly wanted to cover myself because I could see that signal wasn't going to quite work out for me. And I covered it rather quickly, but with the bounce up, in those 7 minutes of time between my fill and my cover, I ended up only being able to cover the trade for a 50-cent debit. So I still had some risk out there. My original risk started at $1, so I was able to at least recycle half of that capital back into my account, but it still did leave a little bit of risk overnight. However, the way I covered that capital basically created a trade that had a $9.50 profit potential versus a 50-cent risk. So the overall risk versus reward on the trade that I ended up creating still looked great. Still could have ended up underwater today, depending on how the market went. But the most important thing to me was reducing the overall capital risk in that trade and at least recycling some of the capital back into my account. From there, we went into today's market. And as we all know, we saw a nice gap to the downside, and it continued to trade lower throughout the day. As we continue to see this move lower, my spread was looking a little bit more favorable. And when I saw the opportunity to just close it out and recycle the rest of that capital back into my account, that's exactly what I did. So I covered that 50-cent loss. I actually closed the trade for 75 cents. So I locked in a small 25-cent profit. And the most important thing to me was bringing the rest of that capital back into my account. So I took that losing trade that was originally $1 risk. I covered that and reduced it to only a 50-cent risk. And then today I still had the opportunity to close it out for an overall profit. And I'm sure if I had held it closer into the close today, I probably would have been able to squeeze out a bit better of a profit. But at the time, whenever I did close this out, the market was still being a little choppy, and I saw the profit there. I saw the ability to recycle my capital, and I just wanted to go ahead and take that in and bring it back into my account. So that's what I ended up doing. And I will probably add this slide onto the class tomorrow so you guys can actually see the numbers and how that all worked out. But that's an example of where the signal didn't quite work out, but I still reworked it to at least reduce my risk the first day, and then was still able to take a profit that second day. So hopefully that helped answer your questions. Dan, great to hear that you signed up for the course tomorrow. Look forward to having you on board. If you decide that you want to do the day trading with you next week, can you still sign up? Absolutely. So if you attend the class and you're really liking everything that you hear, and you're like, well, if it looks like Monday's market is going to be volatile because we technically closed below 2,600, and I believe, I don't know, I believe I read something out there that if it looked like we were closing below 2,600 today and we didn't see a bounce back up in the market, it didn't look good for the start of next week. So, you know, who knows if that will follow through, but if it does, it might be a very fun day for these intraday style trades. So absolutely, if you like what you hear Saturday, there's always time to still sign up for the live trading days. And I will note this, yesterday I was actually a little bit frustrated. There were still viable entries to take, But like you saw with the trade I just said, I didn't quite get into them. And so if for some reason we get a lower volatile trading day, Monday and Tuesday during our live trading days that we have scheduled out for this class, and we're just not quite seeing the intraday trading strategies that we do, that we can jump into, I will, one, lean more towards the swing trade entries, and I'll show you those examples tomorrow in class of how you can use this on swing trades. And two, I will try and look for another day in the future to where I can have y'all all jump back in for a live trading day when the market's a little bit more volatile or at least a little bit more choppy in the daily ranges. And then we can jump in and look how to implement this strategy during live trading days on the intraday trade. So I want to make sure that I'm able to give that to you guys because I know it's hard to kind of alert these in the room. Like I said, on that day I covered yesterday on the trade, I was only in the trade for 7 minutes before I ended up covering it when the signal went against me. So they can be rather quick, and especially in volatile markets, which is why some of you, when I first started in the options room, might have noticed that I was alerting these trades at first because it was an overall trending market. We weren't seeing as much volatility. So it was easier to be able to alert it and have y'all still get filled at a similar fill and be able to follow along. But as the volatility picks up, it's excellent for this strategy, but unfortunately, it's not as good about being able to alert the strategy and have y'all be able to follow along successfully. So it needs to happen a little bit more in real time, which is why I'm really excited about these live trading days coming up on Monday and Tuesday. And why I also mentioned that if for some reason those happen to be the 2 days where we're not seeing as much of a volatile market, I do plan to come out with another live trading day so that way you guys can really see how to use this strategy on intraday style movements without technically day trading. Rubber Duck, thank you. I appreciate it. Rubber Duck mentions that he loves the leg in strategy. It kills it. I do find it to be very useful. So like I mentioned, for those of you in the options room, you might already be aware of what to do there. And hopefully you guys can get further education on Saturday along with the compound breakout tool. Tuner in the futures room is asking, do you primarily trade the SPX then? Yeah, Tuner, for me, I do, at least in this market. And there are a few reasons why. One, I love the fact that SPX is a cash settled index. I don't have to worry about assignment, which helps me in my small account. And I love the fact that I can do a same day expiration and not have to worry about it and just let it go into the close. However, I've done this style of trading on Amazon, on Netflix on intraday charts, on Tesla on intraday charts. I've also done this on swing trades for LG&D and Amazon as well. And Activision, I have some great examples of how you can use this on a swing trade in that. So you can use the strategy for both swing and intraday trades. Just for me and my trading personality, I like SPX. I've traded it throughout the majority of my trading journey. So I kind of have a bit more better understanding of its personality, if you will. And for those of you who are new to trading, you'll find that as you get more and more years of trading on your belt, and if you're like me and you're doing this constantly throughout the day, you'll start to understand little ebbs and flows within the market. And if you're in particular watching one symbol quite frequently, you'll start to understand when it might be doing a fake out versus when it might follow through. And of course, that's not going to always be the case. If it was, we'd all be billionaires, right? But it does help out quite a bit. And so because SPX is one that I've traded constantly throughout my career, it is one that I often go back to. And of course, along with that cash settlement, I just can't beat that, right? I used to do this quite a bit also on NDX and RUT. And RUT is still viable, but NDX, I mean, with the option chain, the way that's grown throughout the years, I mean, it used to be 5-point increments, right? Now you're lucky on a normal same day expiration to even get 5-point increments if you go at that $25 mark. Now they're 10. And then if you go further out in time, even to January, well, January is still 10, but if you go further out in time, they start to get to 25 increments. And then if you look at leaps, they get out to $100 I've seen before in difference. I guess they maybe have added those chains up a little bit more, but yeah, NDX is pretty crazy. So I used to be able to trade it back in the day on that. And if you have a higher capital account, then you certainly could look to do so. It's just more expensive. And with the way the strike increments work now, I tend to stay more to SPX at the moment. Um, to be quite honest, Deepak, I don't remember the order of which study went where. And to be quite frank, I don't really care which one is the simple moving average versus the stochastic versus the MACD. I do believe the first one will be based off the several simple moving averages. It's a few of them that are within that one line. And I believe that first one is based on that. But the other two, I can't remember which one's which. And to be quite frank, like I mentioned, I don't mind which of these boxes print in line with one another. I just want to see that at least two are printing at the same time, or that all three are printing in line with each other. That to me is the signal that I'm looking for. So I hope that kind of answers and helps your question there. Glenn, it will be part of the class tomorrow when I talk about the delta. On intraday trades, I'll note that I usually look more to the capital risk that I'm putting in because that's my trading preference, but I'll go over the benefits of using a higher delta versus a lower delta, as well as the cons for both of those if you're looking for the intraday trade. When it comes to swing trading, I still typically try and stick to the rules of looking for an in-the-money strike, ideally that 0.7 delta, as you normally would on just a swing momentum trade, and then I just implement the strategy to it afterwards. Hey, Knucklehead, hope you're doing well. Yeah, I had a great day. Hope you did too. Yeah, Deb and Z, I just saw your message there. I'd be more than happy to pull this up on the Tesla chart. They were asking, let me pull that up on the daily chart. So Deb and Z was curious to see what the signals are looking like on the Tesla chart. JC is very bullish Tesla. Would I bring it up? Absolutely. So here's Tesla, and overall in the chart, I can see why John's bullish, right? We are stacked up on our simple moving averages. We have the blue ATR trailing stop printing. The Bollinger Bands are widening open, allowing for the price to continue higher. We also have a monthly squeeze printing with the daily, weekly, and monthly EMAs being stacked up. On the breakout tool, however, right now, we're not quite getting a signal. Back here, we had a bit more of a bullish signal, and it did go into the squeeze firing, but we ended up getting this one printing to the downside. So here we're not getting so much a viable signal as of right now. If anything, it's a little bit more choppy. It's not necessarily in line with consolidation unless we start to get a further pullback here below the 10. So at the moment, unfortunately, this isn't quite printing a signal. But if we look back, it has certainly done so in the past. So here, for example, was 2 breakout signals for rising by signal whenever the price started to break back above the 100. We had all 3 print the next day. And so had you gotten in on either of those days, you would have seen a nice move up here. Same time for declining by a signal back here, we had them print to the downside, and you might have stayed in that all the way down to this point. You had one print to the upside. This is what I mean by when all 3 print to the upside and then you immediately get one the next day that cancels out. That to me is a little bit more in line with consolidation. We did get a follow through on the price, never quite got the signal here. So sometimes it will work out nicely, other times it doesn't. But this is why I stress to traders out there. And it's something that I learned myself as well, that to me, I never trade based solely off one indicator. If there is one indicator out there that would completely tell me when to get in and out of a trade and the entry, I mean, please let me know what that indicator is, because I'd love to take a look at it and see how it works. But from my experience, it's more when all the indicators that I look at are in line with each other that make for a better entry point. So, for example, when we look back at this entry on Tesla, we saw that there's consolidation, but the price was starting to break above it. We saw that the momentum was starting to turn back above the 0 line, and we saw the full set of breakout signals to the upside. So this was starting to be more in line with each other. If we pull up something like SPX and look at it more recently, we can see a similar situation on the daily chart. Oh, it's a little bit too zoomed in for me. There we go. So here we started to see more recently a set of rising bias signals. Now you would have been cautious here because of the momentum still being negative, but when I see this occur, this to me is a note that, hey, I might be moving up to my next resistance level to test that. So I can take it as a short-term rising bias trade. At that time, we started to see the price break above the 10-period moving average and hold. So I liked seeing that. That was showing me a little bit more sign of a support. And the next day when it confirmed that, for me, probably would have been the day I entered and looked to play that to the upside. We moved right up to the 100-period moving average. That next day when we started to stall out would have been, to me, the signal to go ahead and close out of that trade, because keep in mind, this is still an overall more bearish trend that we're in at this point. And this signal was just telling us, hey, we might be moving up to our next resistance level, which is exactly what we did. We started to stall out. We then started to break below the 30 moving average, putting that from support back into resistance. On this day, when we broke the 30, we also broke the 10, and we started to print 2 breakout signals to the downside. The momentum at that point had consolidated back towards the 0 line, but didn't see a cross above it. And typically, whenever you see a move back like this occur, and you see that resistance levels are holding and it's turning back down, this is just a reset of the momentum before it continues back to the downside. So we see that move lower start to occur. You could have jumped in early here and taken some profits. If you waited for all 3 signals and jumped in that day, you still could have taken those profits the next day. Once we started to see ourselves flatten out in comparison with this price level, you might have looked to take your profits off. Otherwise, if you were waiting for that signal, you would have taken them off here whenever we got this one that contradicted and ended this declining bias signal. The next day, we got a full move up, so you could have looked at a rising bias trade, once again, only back into resistance levels because of the overall trend that we're seeing. You might have taken your profits off here, or if you waited, you would have certainly taken them back off here whenever we tested the 100 and didn't get that follow through. The next day at open, we started to get these 2 breakout signals to the downside. We certainly saw that follow through and movement the next day, so you could have jumped into a declining bias trade there if you jumped in early and played it back down towards support, or you might have jumped in here. That next day we did see an intraday move follow through, ended up forming a bullish divergent bar though, so that to me would have been a signal to cover my profits and get out, and then played it back into today. So hopefully that gives you an understanding. The compound breakout tool, whenever it's in the trend, can usually signal that continuation. If the signal is going opposite of the trend, like for here, for example, we got a declining bias breakout signal, but the overall trend is rising, that usually means it's only going to move down to a support level. And until it breaks that support level, you might want to consider that as a move that has satisfied itself. So this one, we ended up seeing a move down to support. We held support. When we held support, that would have been a sign that if you were in a short-term declining bias trade here, look at getting out and locking in those profits. And you can see we bounce back up from that point. Scott, yes, sometimes I'll use the compound breakout tool to make exit decisions as well. For the intraday moves, sometimes it's more about the profit that I see that I'm locking in, or maybe the overall stalling out in the market. So you got to be aware of theta decay when you're doing the intraday style trades, which we'll discuss more in the class. But for the intraday style trades, it comes for a few different things. But on the longer term swing trades, I'll definitely look at that as a potential exit position, because if we do start to see that break or that choppiness, I understand that we might be headed a bit more towards consolidation. And if I have a trade that would hurt from consolidation, then I would want to look at taking that off the table to protect that capital and profit in it. Artful Trader, yeah, I'd be happy to share the chart with all the extra indicators. What if you email me? I'll just, go to customer service. And this is for anybody. If you email me and you're like, hey, I have all these indicators, please, share with me the full chart. I'll just confirm that with customer service and make sure that you do have them all. So I'm not just, giving away everything. But if you do, I'd be more than happy to share the charts with all the indicators there. That way it's easy for you to put them on. Yeah, and exactly, Helen. So if you have all the proprietary ones as well, just shoot me an email or shoot customer service an email. We'll make sure there's that confirmation. And if so, I'd be more than happy just to share the full setting. Yeah. So if you're asking about the dots here, so I know it's yellow or pink, or a light green, light red, depending on, how you're looking at it or what charting platform you're on. But the dots here indicate when 2 of the 3 signals are starting to print. So these dots, so basically, if you wanted to, you don't ever really have to look at these unless you're in a consolidating trend. If you're looking at this signal purely for entries on a bullish or bearish trend, all you have to do is really focus on this top row for a bearish trend and on the bottom row for a bullish trend. When 2 dots print, you'll start to see, when 2 signals print, excuse me, you'll start to see this dot print down here. So that's an example for an early entry and also a warning sign to say, hey, be prepared. We might end up getting 3 signals. When you do get 3 signals that print, you'll get that triangle that prints here. And that shows you all 3 are printing at the same time. And it's a valid for a potential go. So hopefully that clears that up. Yeah, Alan, I'd be more than happy to show how you can import that shared workspace. And I believe we also have some videos out there also on the Simpler Trading website dedicated to that too. But I'd be happy to do that tomorrow. Yeah, Deb Z, my email address, I'd be more than happy to put it out there in an alert. But it's just Allison@simplertrading.com. I know some people spell Allison a lot of different ways, so I'll still post that out there for y'all. And then I'll post it to the options room as well for you guys. Judy, yes, thank you for that note. I'll try and see if there's a way I can increase my cursor size or maybe get Camtasia so I can highlight things a little bit better in tomorrow's class and in the future whenever you guys are taking a look at things, absolutely. I understand it can be sometimes hard to see everything on a chart, especially if you have a smaller screen. Tim C, great question. Tim's asking, when you put more risk in a trade, do you use a wider spread or put on more contracts? I've done both, right? So typically, though, whenever I'm looking at a wider spread, I'm only doing that because I either want a greater profit potential from the spread width, or it still makes a decent credit overall that I'm legging into. The contracts is another way that you can look to put more capital in the trade. You could also look at putting more capital in by just getting a higher delta strike that's in or at the money to be able to leg into. But you can do this on multiple contracts. Sometimes what I would do, like for example, whenever I was growing that $10,000 account into 47 and I was seeing, really volatile days in the market, sometimes what I would do on the entry signal is I would open 2 contracts. I would cover 1 contract just as I normally would, and then I'd leave the second contract out there to kind of trade longer with the trend and then either cover it later or just trade it as a long strike going into the close or into the next day. And Yishan, absolutely, yes, I will be also just show the indicators and the indicators tomorrow during the strategy session as well. So that will be a part of the class too, absolutely. John B is asking, I am new to spreads. What kind of spreads do you typically use? Normally, I use vertical spreads, leaning more towards long debit verticals, but I will explain how you can do it with credit spreads and why or why not you might want to put that on. And then I'll also do butterflies as well. And for those of you who signed up, you should also, depending on your order, have received the options chain class, which will go into that. If you're a newer trader, just let me know and I'd be more than happy to help share that. And then of course in the class itself, I will be going through how those spreads work in regards to the strategy too. Yeah, Jerry, you can use this trading the SPY. I actually have an example on the presentation for tomorrow of where I used it on SPY as well. And SPY is a great way to use it if you want your strike to be more in the money because it's relatively more inexpensive to be able to follow along with those moves. Artful Trader is asking, any idea if the compound tool works at all in the TOS iPad app? To be honest, I believe it does because I had the app, my iPad actually in San Francisco during the mentorship, and I was kind of using that on the side to watch some of my trades throughout the day. And if I remember correctly, it did show up on there. I'm almost positive it did, because I was pretty impressed by how the chart settings looked itself on the application. I would have to double check with that, but I believe it popped up properly. I'll get back to you on that though and let you know for sure. DC007 is asking, do you have the compound breakout tool for TradingView? Currently, right now, it's only for TradeStation and Thinkorswim. I've had several people email me, though, asking if it would be available for other platforms. So I'll talk with Eric and see whether that's possible or not and get back to you guys and let you know if it will be. DDS, the indicator is different from the MTF trend because it tracks a few different things in a few different ways. So if you pull up the indicator side by side, unfortunately, I don't have that one on my platform. You'll see sometimes where they're in line with each other and sometimes where they're not in line with each other. And that's also true. I also got that question on the Ready Aim Fire tool. And it's the same situation. They're not tracking the same things. They might use similar studies within it. I know the Ready Aim Fire, I believe, uses stochastics as a part of it. But it's not tracking necessarily the same thing. It's great, though, whenever the studies are in line with each other, because that, to me, like I mentioned, only makes for a better entry point to jump in. Because if I see that in line with the MTF, in line with the RAF, and in line with my other indicators, that, if anything, is just telling me get into the trade, right? Because that looks like a much better entry than if they're not matching up with each other. Nuck, yeah. I'd be more than happy to answer that again. So he's asking, using the tool for futures, you can absolutely use them on the charts for futures. You can use them on short time frames, long time frames. As you can see here, when I pull up the ES, it's still, well, my Thinkorswim charts went slow, but it still populates down here, as you can see. So it's still viable if you're looking more for the indicator and the signals to be able to use that. And then, of course, as I discuss the strategy and discuss what I look for in the intraday charts, if you're day trading the futures like that, you can still apply the same method to day trading the futures, but rather than covering and legging into an option spread, as I normally do, you would just look to jump in and out of your futures trade. Don, I'll go over the 1, 5, 10-minute and hourly timeframes on the chart and how they interact with each other. But in short, I typically take my entries off the 5 and 10-minute charts. I like to look at the 1 hour and the 1 minute chart, or the 30-minute chart and the 1 minute chart, for overall trend direction and support and resistance levels. So when I see support and resistance levels that are on the 1 minute chart in line with the 5-minute chart, in line with the 10-minute chart, in line with the hourly chart, that to me is going to be a stronger level that the price might hold and stall out at, versus if I only see that level on a 1 minute chart, but on none of the other time frames. David B, sometimes my options are further out, especially if they're on a swing type trade, because I still look at that setup as a normal momentum trade. Other times, like today, for example, I got into a trade today, covered it for 20 cents, and it expired today. So I locked in that 20-cent profit, and it's already recycled back into my account by the close. Jerry, the reason why there are pros and cons to trading SPY versus SPX. So SPX, like I said, has that cash settlement. Typically, when I leg into the spreads on that, it allows for a greater profit potential to occur. Whereas SPY is smaller width on the strike increments. So it can sometimes mean that I'm locking in a profit a little bit more easily, but it doesn't necessarily mean that I'm leaving myself that extra profit potential out on the table to be able to lock in either that same day or the next day. So, and at SPY, of course, I wouldn't trade same day expirations because there is that risk of assignment. I actually had a risk of assignment earlier this year on SPY because of that. So I'll usually go out at least a few days on SPY for that expiration so I can close out that spread the next day and not have that risk of assignment. And Robert, yeah, I do typically trade SPX, and I've done this strategy on RET, but I've also done it on SPY as well. I'll have examples of both of those, and you can certainly trade it on the Qs. That's actually something that I've been thinking about doing a bit more. I just haven't taken a look at it, but the Qs are a great way to deter from NDX, which is kind of right now, at least for a smaller account, a little bit harder to trade with those strike increments and prices. TNT, the days for live trading will be Monday and Tuesday, and it will be all day. So I believe, let me pull up the page here. So for those of you who are still debating about whether to sign up, here is the promotionals page. I'll post that here, these links in the room. So this is where you guys can sign up if you choose to. But the package, as I mentioned, there's the strategy package here. And then the pro package will include the 2 live trading sessions as well as the money management session with John. And the times for those sessions are down here. So 8:30 to 11 and 1 p.m. to 3 p.m. John will be in from 1 p.m. to 3 p.m. So it will be all day. And on Tuesday, I'll have to double check with John if he'll be in for that one as well. I know he's scheduled for Mondays right now, but on Tuesday, if he's not in, more than likely I'll just keep the room open during that lunch hour. We'll take a lunch break, if you will, but I'll still be here in front of the computer looking. So if we do get a signal during that time, that looks like a great signal to jump in on, we won't miss the opportunity to take that action. Marlon, great. Marlon mentioned he jumped in 3 times today, 2 winners. Outstanding job. Great job. Oh, Yashan, absolutely. I will be going through the indicator settings tomorrow in the class. Absolutely. And thank you for that, Yashan. I will make note of that and do that right after we get out of the room here to make that a little bit bigger. Thank you for my cursor size. Brian, it is possible to target the 1K a week with the strategy. It, of course, depends on the type of market as well as maybe the strike that you're getting into. But for example, there was a trade not too long ago where I legged in. I believe originally it started as a slight loss, right? So the initial signal went against me and I covered it for a debit. I then later in the day was able to leg in further from a vertical into a butterfly and guarantee myself that profit. And then by the close of the day, because of where SPX had closed for settlement, I not only got the profit that I had locked in, but the close that day actually closed right at my mid strike on the butterfly. So I received the full $5 of profit potential basically on the spread. And because I had already locked in a guaranteed profit, my overall profit on that trade ended up being around $5.30 or $5.33, something like that. So I actually got above the overall expected max profit potential because I technically legged in with a profit on the trade, and then it settled right in the sweet spot of the trade itself. So that right there, just based off one contract, would have been $533. So depending on the contract amount you're jumping into, or depending on where the spread ends up closing that day, it's certainly possible to get that 1K a week target with the strategy. And then it also depends too if you're doing this more on swing trades as well, because those have worked out quite nicely too. No, I'm sorry, I'm trying to jump through questions. I just saw the one from Terry pop up in the corner though. Terry's asking, I do not have the RAF or voodoo line indicators. Will that be a problem in Take Your in class? Absolutely not. The voodoo lines is actually one I've been wanting to add to my charts. I just haven't done so yet. And the RAF one is one I currently don't use. So it's not to say that you can't use it. And if you like those indicators to help you with your studies, please feel free to use them, because if they help you determine levels or entry points, it's still great to have those be in line with each other whenever you're using this strategy. So I will never tell anyone not to use an indicator if they like it, because by all means you should use what works best for you, but it won't be necessary to have those indicators with taking this class. Eric, I'll go through that on the class Saturday for the top hat settings. Absolutely. And I believe those settings are also within my trading video, my chart video. So I'll post the link to my traders page in the options room as well. And if you click on that, there should be a video in there that goes over my chart settings. And in it, you should see what those top hat settings are as well. Yeah, so one of the questions out there is in regards to support and resistance. So like I mentioned, I use the ATR trailing stop as support and resistance levels. I'll also take into consideration the Bollinger Bands as well as my moving averages. So I take into consideration all three of those things as support and resistance levels on the main chart for the price. And Todd, yes. So on Tesla, let me pull that back up. When you had the one red print, it will cancel out the other signals. So here we had two green signals technically start to print, but because this one printed here, it technically cancels out this signal as being viable, at least for this indicator. Doesn't mean that the price didn't continue up, but it just means that there wasn't a strong bullish trend here to say that it was going to do that. So if anything, this is just more choppy and it's not really telling us a real signal here at the moment. Because it's not super choppy like here to show consolidation, but it's not giving us a full signal either. Bill's asking, do you require the price to cross above the moving average before entry? Sometimes, not necessarily. It's always good to get that confirmation if, for example, everything's telling you there's an entry, let's say, but then it stalls out at resistance. It doesn't mean that whether that's a moving average or something like this, it doesn't mean I necessarily want to jump in because that level could still be acting as resistance. And we might get a signal like this that prints confirming, yeah, that is resistance. This move up was only a move up into resistance before we broke back down. So sometimes I'll take an entry if it's prior to a cross, as long as all the setups look good. But at the same time, if I think that that's going to act, for example, as a resistance level or as a support level, then I might pause and wait for that confirmation of a cross before happening. So it just kind of depends what I'm seeing on the intraday charts or on the chart itself and the overall trend and movement. I've already answered this, and I'll go through it in more detail in the class, but I know this question has come up quite a bit in my emails, and maybe some of you guys are just jumping in now. But the three things that make up the compound breakup tool are several different simple moving averages, are the stochastics full, and the MACD histogram. I look at all three of those studies are in this one tool. And I look at a few different things within those studies. I gave what those were to Eric, and I said, these are what I look at individually, but these are also what I look at together, combined within those studies. And that's how he was able to create this for me. But it's, once again, guys, it's several simple moving averages, the stochastics, and the MACD histogram. Drummer John, absolutely. I'll go over how to leg into a butterfly in tomorrow's class. That will be a good chunk of it. That's part of the strategy. So we'll go into how you leg into lock in those spreads. We'll go through how you can leg in immediately into a butterfly, and also how you can do it from a vertical, leg into a vertical, and then from there leg into a butterfly as well. So we'll cover both of those. Russ, great question. Russ is asking, why would you limit your profit using spread versus straight call and put risk? Well, there are a few different things why. One, if I just held a long call or put out there and I'm looking at this for an intraday move, Well, as we know with today's intraday move, let's just pull up SPX on an intraday chart real quick. I'll go to a 30-minute chart. So today was a little bit more clear, but if we look back at Tuesday, for example, we saw a strong move down and then we saw a bounce back up. If I took an entry around here, let's say for that put for a bearish move, but didn't look to cover it and we got a bounce back up, then all the profit that I had here would have escaped. And because I'm avoiding day trading in my account because it's under that 25K, and certainly if you are limited to how many day trades you can put on, you're not always going to just want to jump into a long call or put and either hold it overnight because you might end up losing that profit the next day. And so you might miss out on some of the profit if you just look at legging into a spread like I typically do. But the most important thing to me is recycling that profit and that capital back into my account. So if I can leg into a spread for a net credit, or at least bring back a portion of that capital into my account, that to me is always a good move to make. If you're able to day trade, if you have a bigger account, then you're more than welcome to just trade these as day trades. And I'll cover this tomorrow more, but whenever I traded accounts and I was starting to trade and I started helping my family trade their accounts, that word kind of spread quickly throughout family members. And so I started looking at, several different aunts and uncles' accounts, as well as my own and intermediate family's accounts to help trade out of. And those accounts were of varying sizes. And when I was taking these trades and day trading, and when I first started trading, I was in a larger account that was above 25K. So day trading was no issue to me. But when I moved on to help some of these smaller accounts, I was getting really frustrated that I was not able to take these moves and I would keep getting flagged. And at one point I was even flagged for day trading over that amount, right when the account was at that curb of 25K. So I had to wait for the account to either get back above or for those 60 days to occur so that I could, start trading in the account once again. And it can be rather frustrating. And so that's part of the reason to what led me to this strategy here and to implementing it and kind of developing it into the way it is. So that's part of the reason. But what I will say is, as I was using this strategy and developing it, and at that time when I took that 10,000 account into 47K, I found myself still implementing it in the larger account. So even though I didn't technically need to cover it as a spread because I could day trade, I still found myself doing that because what it would end up doing is still leaving a great free trade out there. So for example, on Tuesday, we saw this move down, we saw a bounce back up, which could have then hurt a long put, let's say, because we saw a move down. And then if we saw a move back up, especially if it was a short-term expiration, that theta decay might have hurt me on the trade, whereas the spread is protected a bit more from that theta decay because the short is helping offset the long and vice versa. Now, let's say we saw a move back down that day into the close. Well, the long from that movement might have actually lost some value rather than seeing a straight move down because of that uncertainty and that theta decay that could have occurred. Whereas the spread, even if that happened, might have had that opportunity to close in the money, kind of like what I mentioned on that butterfly, and it would have encompassed that full profit potential. So that's part of the reason why I like to do the spread, mainly because it helps avoid the day trading rule, but also because it leaves a great profit potential out there as a free trade or as a bonus trade to go into the future with, whether it's expiration that day or whether it's further out in time. Yes, Robert, absolutely. There will be a link for the upgrade link that we'll give out tomorrow if you purchase the class and then want to sign up for the live trading as well. Absolutely. Bill, it can sometimes be hard getting mark fills on symbols itself and SPX. What I always recommend doing, and what I do, is I'll start at the mark, and if I'm not getting a fill, I'll immediately start working the order in 5-cent increments until I do get a fill. As John says, don't be a dick for the tick, right? If you like the trade entry, if you're liking the setup that happens, then jump into it. I personally will still always try and get filled at the mark, but if I'm not getting filled immediately, I'll continue to work that order until I do. And of course, as long as the signal's still viable as well. No, Drew, for your Think or Swim account, Drew's asking if there are any changes that he needs to make as far as day trading a spread. Absolutely not. And I've gotten this question a few times, so let me make this clear, guys. For the day trading and the intraday style trades, you don't need the 25,000 minimum in your account. You can do this strategy without technically having that amount in your account to do it. However, you will need the ability to be able to trade spreads in your account. So if for some reason you have an account that's only able to trade, longs and you're not able to trade spreads, then you might not be able to implement this strategy because you need the ability to be able to trade spreads in order to leg into them and lock in those profits along the way. It doesn't mean that you can use the compound breakout tool. And if you are able to day trade, then use the signals and still make those trades and just open them and close them rather than cover them. But if you're looking to do this specifically for the spread style, you will need that ability in the account to trade spreads itself. Yeah, Fernando, not a problem. 1 second. Oh, never mind. Okay. Somebody waving at me from the door. I wasn't sure. I'm trying to see if I missed any other questions here. I don't think so. If I did, feel free to repost it. RS, I did kind of mention, because somebody asked this about the MTF tool as well. How does the compound breakout tool differ from Ready, Aim, Fire? Just very simply, they're comprised of different studies. So I know, like I mentioned, the Ready, Aim, Fire, I believe, is stochastics, and mine has stochastics in it. But that's not the only thing it tracks, and it looks at some different signals. So it's not exactly the same. And whenever I was talking with one of my coworkers downstairs, we were actually looking at these two indicators side by side, and sometimes, they didn't line up. But other times when they did line up, when that compound breakup tool lined up with the Ready, Aim, Fire signal, it usually made for a very nice trade, at least looking in hindsight whenever we were looking at the charts. So like I said, when indicators line up with each other, that to me just makes for a better entry overall. I believe that cost is for anybody. DSI, in terms of the packages, let me bring that back up. So if you're wondering about the price here, and if there's a discount for the futures room, I don't know if there's a discount or anything like that. I believe this is the pricing of it. But what you can do, DSI, if you've been a member here for quite some time and maybe get that member discount or something like that, feel free to call into customer service and just ask them, hey, is there a discount available with this if I've been in futures for this long? Or is there a way, maybe if you, for example, had one of those coupons from a promotion that we've done in the past that you still have active on your account, you could also look to put that towards the class as well if it's viable. I know some of them are. I don't think all of them are. But if you do have one that is, feel free to use it. Absolutely. Drew, spreads technically apply to the day trading rule if you're opening and closing the spread in the same day. As long as you're not opening and closing the spreads in the same day, then the day trading rule doesn't apply. And that's exactly what I'm doing. I'm not opening and closing the spread in the same day. And keep in mind, settlement of a spread at the close of market is technically not day trading. So for example, the SPX trade I got into today that I legged into and locked in a 20-cent profit guaranteed, it settled today at close. Now, because it settles technically after the close of market, it's not day trading. It's settling after that close. So it still is viable to use and it won't count as a day trade for my account, as long as you don't close it prior to market close. Yeah, Hognose, yes, absolutely. Hognose is asking if I'm going to explain the profit goal I have for when I enter the long into the soon-to-be spread. Absolutely. I'll talk about having a profit goal out there, as well as when you might be looking to cover due to reasons on the chart or what's happening in the market itself. I'll go over all those different things that I look at to determine when I decide to leg into the spread and cover. And sometimes it's just a target of what I like as a profit out there, right? So if I see $1 profit out there, I'm going to take it. It looks like a great profit, especially if the chart's starting to stall out at that point. If it's still going in a strong trend, now I don't have any recent examples of this, but for example, whenever I was growing that $10,000 account to 47,000, there were sometimes days where we would be in a strong trending day in the market from where the open to the close, and it was just either a very strong bearish day or a very strong bullish day. And I would throughout the day leg into these trades multiple at a times, and you would see sometimes on the option chain it just looked like I bought a chunk of the options. So let me kind of pull that up to lay in that point. But let's say we are here on Monday's trading day. Sometimes whenever I did this legging in strategies, I would have from 25.70 all the way to 25.30 of strikes that I'm in because I've legged into spreads along the way. And if I get really strong signals, there were days that I was legging into spreads that had technically a $3 credit or even a $5 credit on a 5-point spread. So you can definitely leg in. More recently, I haven't seen as strong of that movement, but if we do get into another strong trending day, like for example, if Monday is that day where we puke and just continue to puke to the downside, like some people in the media have been talking about, then that might be the great opportunity to do one of those 2 contract starts where you cover one contract as you normally would, following the rules, and then you leave the other contract out there longer to go with the trend more for the day. And then when it looks like that trend's finally ending, cover it at that point. But I'll go into that in detail tomorrow, absolutely. Judy is asking, why do I not use the RSI? It's just because I'm not as familiar with it, Judy. It's not to say it's not good, and it might be something I look to implement, but I'm just, to be quite frank, not as familiar with it, and I've been successful without using it, I guess. So that's probably why. But I love looking at new things all the time. I mentioned in an email to somebody recently that they were asking, and I thought it was a great question. They were asking, do you find sometimes that you learn too much in education? And part of my response is yes and no, right? I think I'm very much an educator, and the fact that I'm a habitual learner. I always want to learn new things. I probably get that a bit more from my dad and from my family, but I love learning new things, and I love the opportunity to be able to learn about it. So if there's something out there, especially in regards to trading, that looks like it's viable and working for people, I love to learn about it. I want to know what it is. I want to see if I can implement it to my trading strategy. But if it's something that looks great, but it's just not something that fits with my trading style or maybe my risk tolerance, then it doesn't mean that I necessarily implement it into my trading strategy itself. But I am happy that I learned about it, because now I'm aware of what it is and looking forward to it, to potentially using it in the future if an opportunity comes up to do so. So yeah, I will definitely look at the RSI and see if that's something that makes sense for my trading style. But it's just not something I've looked at yet. And then RS, yes, the strategy class is going to be recorded. You'll have it for life. You'll always have it here in the Simpler Trading site. So for example, if you go to simplertrading.com, and if you've ever purchased a class with us, you'll know this here, but you go to my dashboard if you're logged in, and you'll click my classes. And this is where all your classes will live. And you can see here the profit recycling one is already there. And for those of you who signed up and were within the first 200 to get that options chain class, it will already be populated in there currently. So I know I've gotten a few emails asking, where's the options chain class? It's already in the profit recycling class here. There are questions that go with it. I made a quiz around this class. So you can quiz yourself and see how much of it attained. And I'll also be doing that for this class as well. So I'll be building a quiz around this class. And once those videos get uploaded and the quiz is uploaded, which may be a week or so, but once that happens, you'll also be able to have a quiz out there. So if you want to revisit in a refresher, you can also kind of test your knowledge and see what areas you knew really well and retained really well, and other areas where maybe you got lost on track a little bit. And if you did miss that question, For each of the questions, there will be a little timestamp in there saying, hey, go back to this part in the video, and that's where the answer lives, and you can kind of review it from there. And Masuki, yes, it does work even on a choppy daily chart as long as certain criteria is met. And if it's not, then what I usually say is go to a different symbol. And Amazon is usually a good go-to for this strategy, because even on lower volatile days, Amazon usually has a strong daily range to be able to implement this strategy on. And Marlon, yeah, they should be able to be accessed from your account. The slides that should be available to download in the download section. So if it's not there now, it will be. I know they took my options chain slides, so they should be put in there soon if they haven't been. And the same will be for these on the profit recycling ones as well. So I am not seeing that many more questions. We've kind of been in here for almost an hour after close. So I'll start to wind this up now, but thank you guys for joining me on this Q&A session. I really hope it was helpful for y'all to kind of get a better understanding of what the class is going to be about Saturday, as well as the live trading days. Once again, if you do have any further questions, please feel free to shoot me an email and I will try and get back to you. There are still a few in there. And as I mentioned earlier, there's only one of me and there's a bunch of y'all. So I'm really trying to get back to each one of you guys with an answer. But if I don't get back to you right away, I apologize. It's not that you've been forgotten. It's just that you're in a long queue and I'm just working my way through it. So have a great rest of your day. As always, may the trade be with you. Stay safe out there this weekend. And for those of you who are joining me on the class tomorrow, I look forward to it and we'll talk then. Otherwise, I'll talk to y'all again next week. But bye. Have a great one, guys.